Our tutorial, Moving Averages Strategy Indicators. Strategy indicators consist of identifying trend following or mean reversion asset price patterns. Main indicators include single or multiple, lagging, or leading technical indicators. This topic is part of quantitative trading analysis with our course. Feel free to take a look at course curriculum by clicking link at description box below. This tutorial has an educational and informational purpose and doesn't constitute any type of trading or investment advice. Please read full tutorial disclaimer at the end of the video. Simple moving averages asset price overlays consist of trend following lagging indicators for identifying uptrends and downtrends. As a formula, current periods, K number of periods simple moving average of close prices, is equal to 1 divided by K is the number of periods for which we are calculating the simple moving average, multiplied by the sum from the 0th to the K minus 1 observation of previous period's close prices all the way into current period close prices. Great. So let's go into RStudio so that we can study simple moving averages with greater detail. Excellent. So here we are within RStudio. The first step within the tutorial is to load the R package. This is done with library command, and within it we have, within quotations, package name. In this case, we'll be using QuantMod. So we select that code line and click Run or Ctrl Enter on the keyboard, which is equivalent. The next step is to do data reading for the tutorial. For that, we're going to create a variable, which we're going to name SPY, and it's going to be equal to read.csv. Within it, we have the name of the data file. This data file is stored within the project directory, and it includes a plain text file with .csv or comma-separated values named Moving Averages Strategy Indicators Data, and as mentioned, .txt or plain text file, comma header equals to true. So we select that code line, click Run or Ctrl Enter on the keyboard, and the next step is, as we can see here within the global environment, it created this SPY object, which is a data frame, and if we click on the spreadsheet kind of icon, it opens the data object. Within it we have the following: column of dates, then we have SPY open, high, low, close, volume, and adjusted close prices. SPY corresponds to the ETF investment vehicle, which intends to replicate the Standard & Poor's 500 index, and adjusted close prices, which were adjusted for dividends and splits. So here we have data with a daily frequency from the beginning of 2016 to the end of that year. Therefore, 252 rows of data. So going back into the code file, the next step is we're going to convert that data frame into an extensible time series. We do so here. Notice that we're overriding SPY, and we do so with XTS function for extensible time series, and we select from SPY data frame columns 2 to 7, ordered by as date column number 1. So we select the code line, click Run or Ctrl Enter on the keyboard, and by going back into that data object, now the dates became the index of this data object. So going back into the code file, the next step is we are going to do the calculation of moving averages strategy indicators and their associated chart. For their calculation, we create a variable which we're going to name SMA for simple moving average, and with the cbind or column bind, we're going to include from SPY with the $, we select SPY close prices, comma, SMA function for the calculation of that 5-period simple moving average of close prices, comma, also with SMA function, a 20-period simple moving average of those close prices. So this will be considered as a fast simple moving average, and this one slow one in their number of periods relationship. We're going to rename the column names for this simple moving average as SPY close, SMA 5, SMA 20 within their corresponding columns. So we select those code lines, click Run or Ctrl Enter on the keyboard, and there we have our SMA variable here as an XTS or extensible time series. So we go ahead and click on the spreadsheet kind of icon, and we have SPY close prices and the two simple moving averages. Notice that for the 5 days, the first observation is at row number 5, and it includes the arithmetic average of those 5 observations, including the one of that day. And for the 20-day simple moving average, we scroll down, and the first observation is at the 20th row, and it includes the arithmetic average of those 20 prices, including the one of that corresponding day. So going back into the code file here, the next step is we're going to visualize this within a chart. We do so with a line chart for SPY with its theme as a chart theme in white, so it has a white background, and we're going to add those two simple moving averages, one for 5 periods, the other one for 20, and the one for 20 is going to be colored in blue. So we select that code line, and then we click Run or Ctrl Enter on the keyboard, and there we have the chart. So we're going to zoom into it. So there we have this SPY chart. On that vertical axis, we have the close prices. Then on the horizontal one, we have dates from the beginning of 2016 to the end of 2016. And here we have colored in green are those close prices. Colored in red, that's the 5-day simple moving average. And then colored in blue, that corresponds to the 20-day simple moving average. So in red, the fast, and in blue, the slow simple moving averages. So those corresponding simple moving average consist of smoothing the original time series. Also, the smaller the number of periods within the simple moving average, the closer it resembles the original time series, such as at this red colored line we can see here. On the other hand, the larger the number of periods, such as in this slow or 20-day simple moving average, the less it resembles the original time series. So we're going to close this chart here, and now that we've finished studying this, let's go back into our slides. And as mentioned previously, this tutorial has an educational and informational purpose and doesn't constitute any type of trading or investment advice. Please pause the video now so you can read the full tutorial disclaimer. Okay, so with this, we finished this tutorial. Thank you for watching.